We're going to be digging into what's driving growth at Bank of America. Aron Levine is going to tell us all about it. He is the president of Preferred Banking. But before we even dive into that, Aron, I have to tell you, it's been quite a day.
It has been quite a day, yeah.
So what I'd like to see if you can kind of set the tone. I mean, with so much volatility, tariffs, new administration, geopolitical concerns, what's the mood amongst some of your employees, among your clients?
Yeah. Well, good to be with everybody. I mean, I think the first thing to remember is the mood has been very good. Put today aside for a second.
Okay.
Right? You know, we started the year, spending, consumer spending has still been strong. It's still 5 or 6% up year over year. So that's a good sign. And I know there's signs and there's different companies that came out today saying there might be some solace, but generally speaking, good, strong growth. You still have very low unemployment. You still have wage growth. You still have our clients. If you look at their balances and their banking and savings accounts from now versus 2019 pre-pandemic, it's still quite high, quite a level higher, and it was still up year over year. So what you're seeing, and especially in the cohorts that are sort of below 50,000, below 20,000, they actually have still some reserves. The upper levels, their money has moved more to high yield type alternatives, and so it's moved to the market. So I think you come into it with a fairly good set of stable things, right? But now, because of tariffs, because of increased uncertainty, you see what happens today, and people start reacting to it, and then we'll see where that goes.
And what about your employees? I mean, how do you talk to them throughout all this?
Yeah, well, our employees, their focus is always on our clients. And I think the thing that we keep reminding them is this is why you're important. And so we have 30,000 associates in financial centers across the country, and some of them work on lending, some of them work in small business, some of them are financial advisors, but all of them are there to support clients through these times of needs. And, you know, whether it's major events like we had in LA, and our associates are proud to support the community during those times, or it's more volatile market days like today, the associates know that this is what they add value, and they're supporting clients, and this is what's important about what they do.
Now let's get into where you're finding the opportunities with all this talk that we've had for today. Where, in saying consumer banking, where are you seeing the trends among, spending, among saving, among investing?
Yeah, so as I said, spending has been up, and investing, what we offer our clients at Bank of America is really in a whole continuum. So everything from self-directed through our Merrill Edge platform, which we've seen enormous growth over the years. We recently hit a big milestone of $500 billion, we maybe we'll talk about, to then more guided, which is sort of a digital model, to then, of course, true advice through Merrill Lynch and the private bank. And I think what's really important is then clients of every level of wealth have someone to talk to, and really the focus in on thinking about long-term investing, thinking about what's important to them, what are their goals. And so what we hear consistently is clients who really want to sit down and talk to us about, I need to save for my child's education, I'm trying to save for retirement, I'm trying to think about buying a home, all these competing life priorities. And so that's the challenge. And, days like today just add some, maybe stress over thinking about it. But we keep making sure that we bring our clients back to what are you saving for? What's the long-term play? You're not playing the markets. You're investing for a goal that you're setting for yourselves. And you can't think of it in terms of what happens today. It's what happens over 1, 3, 5, 10 years.
So that's what you're saying, more long-term as opposed to short-term.
Exactly. Our clients are not necessarily looking to just play the markets. They're looking to really do something over time, and they're setting a goal, and we can help them think through that goal. And then how does a day like today maybe adjust, but it doesn't change your strategy.
So you said these life decisions, so what's kind of affecting them to go toward that long term? Are there other factors affecting that too? I know people are talking about it on social media too all the time too. Yeah.
Well, I think what the hardest part is there's a lot of goals, there's a lot of competing priorities. Yeah. And I think that our clients, especially clients that have lower levels of investable assets, this challenge of how do I think about, I really need to save for my child's college education, but I also have to save for retirement. I've got to think about health care. And I think for us, where we work with our clients the most, and we have a tool called Life Plan, which allows clients to really think about it. Sometimes clients just don't spend the time, right? And it kind of gets overwhelming.
We're busy.
We're busy. And, people's financial lives is always a thing to say, well, I don't really love talking about that, or I don't feel I know as much. So I think the obligation we've always felt we had was education. And it's really educating clients on A, what are the different options, and then B, how to think about return and risk over time, and how to think about different priorities.
Now let's get to that milestone that you quickly mentioned. So this is your consumer investments surpassing $500 billion in assets. What was driving that?
Yeah, so to give context, when we launched our consumer investments business, known as Merrill Edge as a brand, in 2010, we had combined some legacy from Bank of America and legacies from Merrill Lynch models, and had about $60 billion in assets and about 700,000 accounts. So between 2010 and here in 2025, we now have grown that to $530 billion and about 4 million accounts. And the North Star had always been about thinking about a Bank of America consumer client. They need banking, lending, and they need investing. And providing a platform, both self-directed for those who would like to do it themselves, and for us it was always world-class research that we were providing. And we have a guided model, which can be known as a robo, but in our case, our chief investment office is who sets the portfolios, and we have access to advisors in our centers. So it's really been about that combination of bank and brokerage and having the ability to invest on a platform that, you know, we've over the years invested in. And it's won a lot of awards, and it's a great way for clients to access the markets. And that's been what's fueled that massive growth over the last 10 years.
Now, you mentioned the clients who are using. Who exactly is using it? I mean, is it Gen Z? Is it boomers? Who's
yeah, actually, for us, it's really the whole gamut. We started off, again, because a lot of it is Bank of America customers. Mm-hmm. And so I'd say about 70% are sort of in the Gen X boomer. But over the last 3, 4, 5 years, we've seen a much bigger rise in Gen Z and millennials. So about 15 to 20% now is the younger generations. And so it's really the whole gamut, which is important. But what you're seeing more and more, and maybe fueled by social media, is younger investors who are saying, okay, you know, I kind of started off looking at the markets as a quick, almost gambling play. Now I want to think about it a little bit differently as I'm maybe getting a little older, getting my first job. And so we get a lot of those clients who've just gotten their first job, and they're saying, I really want to start investing for the longer term.
Now, what about what sets it apart from the competition? Because there's other, you know, similar things. Is it the tech behind it? Mm.
Yeah, you know, the tech was one we're proud. We built it internally. We have an amazing technology organization run by a gentleman named Aditya Bhasin and his team. But it's three things I would sort of point out. One, it is this ecosystem and this bank brokers integration. So it's all in one place, obviously bankofamerica.com. It's all digitally driven, but it's also combined so clients can look at all of their accounts in one place. That's certainly helpful. It's got a great client experience, so clients can actually talk to somebody. Access to advisors, as I said, which is rare for these more online brokerage spots. And then the reality of 3,700 financial centers around the country where someone can walk in, and even though they're investing in a kind of a digital platform, there's access to an advisor. And I think the other key part to our success has been when there's clients that have bigger need, more complex needs, greater wealth, our ability to partner with Merrill Lynch financial advisors or the private bank and their advisors, so make sure clients are getting what they truly need and not fitting them into a type of a model or an offering that isn't best for them. So we've really worked hard to make sure that across the continuum, clients are working with the type of relationship they need.
And we've heard so many stories. I mean, you're talking about digital, you're talking about, you know, brick and mortar stores. Where do you see most people going now? I mean, you've heard stories about, oh, we're closing branches, or maybe this is going to happen. Is there a reason for all that? Kind of explain.
Yeah, absolutely. Well, look, I will just say, bar none, branches at financial centers are still critically important. Right now, the question is, what are those branches used for? So the model from 10 years ago in which people were doing transactions, walking into a financial center, standing in line to deposit a check or to pay a bill or to do any of those things, that's cut in half. So from 2019 to now, half as many of that traffic is in the centers. But what's been replaced, and what we were one of the leaders to do, and we started introducing what we call financial centers back in 2013 and 14, is clients coming in to sit down with a financial advisor or sit down with a lending officer, talk about a mortgage or a small business banker. And so it's really, if you look at how we've redesigned our centers, the sort of teller line is in the back, and it's used less and less, and the entire front is sort of very nice office space. And clients are using the center as a place for guidance and advice. And that's really the transformation of how it's being used. So We still have over 600,000 clients a day coming to centers across the country, but the reason why they're coming has changed. A lot more of them make an appointment. A lot more of them are coming in and saying, I already took care of my deposit through an ATM or I did it on my phone, but now I want to talk about what I was saying before. Well, what is my way to think about the future and how can you guys help me? So the whole nature of the centers have changed, but it's become more relevant than ever. And interesting stat, because I think everyone always assumes young people don't want them. Right. What students say to us, and we have a huge part of our practice is opening up accounts for students, is they say, I may never actually walk into a financial center, but I want to know there's one there. Right? So just the presence and the brand and knowing we're there is very important to both young and old.
So is it more of like a reshuffling, say, like putting the centers in the center of the community?
Yeah. Well, yes. Well, it's always about location being really important, yeah. But it's the design of the centers is very different. So if you walk into one of our centers now, you'll walk in and it will look like, sort of Class A office space. And you'll say, where's the branch? Right? And so I think, and then there's obviously a lot more technology. We have someone who greets you at the door with an iPad and can do a lot of the things you might want right then and there, and then introduce you to someone to have a more sort of complex conversation. So it really is just changing the nature from all the transactional elements of a branch is absolutely moving to digital or ATMs. And the financial center themselves is a place clients can come and really talk about some of their financial priorities.
Okay, so let's stick with technology. How else is it changing the way, clients do business? I know there's AI as well. Yeah.
Well, look, for us, Erica, which is probably one of the earliest and actually useful forms of AI, early AI, we've had now 2.5 billion, with a B, 2.5 billion uses of Erica since we launched it. And I think it was 670 million just last year alone. So what does that mean? So someone who used to make a phone call and ask what's my balance is, or used to have to go find it, they can just say, Erica, what's my balance? And it pops up. Or Erica, move money. Or Erica, do this. So this idea that now all that convenience and all those transactions and people sort of being able to, however many times they want, find out about their accounts, that's clearly very important. And that keeps growing, and Erica keeps learning, and there'll be new generations of AI to then allow her and that program to give more and more sort of advice and help people. But other than that, I think we're looking at lots of use cases across the company for efficiency, right? So our call centers, our technology organizations, every one of them is using AI now to test it and see how would it apply. And, I think over the next couple of years, you'll see more and more actual uses of it.
Can Erica empty the dishwasher for me? Because I can't get my kids to do it.
No,
can't do that, okay.
We put that on our to-do list.
Thank you. The way people make payments, transfer money, that's changing too. Zelle is a big part. How is that, I guess, are more people using it now?
Well, yeah. Zelle there's 3 times more payments made through Zelle than checks. Right? And so Zelle has become the main way in which people, because again, it's all the different banks have come together, and so it has massive usage, and the way in which people transfer money between them make it so much simpler. The key has been the constant need for us to improve safety, improve soundness of it, really help people avoid, fraud and avoid scams. And so we've put a lot of energy across the platform to make sure we do all the right things to help clients. But it's been an incredibly powerful tool and really changed the way in which people transact with each other.
You mentioned fraud, so dig a little bit deeper. What is Bank of America doing to help deal with that?
So a whole host of things. Anytime we have the ability for you to set up alerts, and we have a massive infrastructure of team that is constantly looking at what's the behavior, and is there anything that just happened that deviates from the behavior that they can trigger it, send an alert so that the person says, oh, this is me or it isn't me. So that's one thing. We have what we call a security center on our application, which allows you to go through a whole series of steps to protect yourself, and it kind of gives you a step-by-step saying, here's the 10 things that you should do. Here's what you can do on the site, double authentication, here's different, and then a whole series of tips. And we're constantly sending out to our clients, hey, be aware of this, be conscious of this, make sure you don't do that. So it's a broad effort that we can do, and it's an effort that is in our financial centers, right? So we have triggers in which someone comes in and we'll say, are you sure about this? And make sure we try to educate them right then and there, our call centers and digitally. So it's something that we have to tackle every day.
Okay, and I want to end with a two-parter. So where do you see the banking industry headed? The first part is, what are your concerns, and then the second part would be, what you're most excited about. So let's start with your concerns first.
Yeah, the concern I touched on a little bit before. I mean, the idea that, kids in their teens and even younger are getting introduced now so rapidly to investing through social media, which can be not investing on fundamentally understanding how companies work, not understanding fundamentally about diversification and long-term investing. And so, for us, the education part of it is just really important. We've had for years a program called Better Money Habits. We've had a whole series of other programs to try to make sure that as, especially younger people are entering in and are interested in the markets and it's getting fueled by that they understand, A, the risks, and B, the difference between just, making a bet on something like you'd bet on a sports event versus actually understanding how to invest for the long term. So that's something that, we're very focused on being part of that solution.
And what are you excited about? What keeps you up at night?
Well, look, I think that the industry continues to be a great pillar of success and foundation. The strength of the banks right now in terms of capital and just liquidity and the strength, our ability. At the end of the day, we spend our day helping someone start a small business. We help people buy a home. We help people save for college. And I think that's what's important. For me, I have 40,000 associates around the country, and when I get to visit them, how they feel about the fact that they've just helped someone to do those things, that's really what's important. At the end of the day, it's about helping people with their financial lives. And then the work that we do in the community, times like this, I couldn't be more proud of what the team did out in LA and in other parts of the country. And so that's what I get excited about and what I appreciate my organization does.
Well, we appreciate you being here with us today.
Thank you for having me.
Thank you very much.